let's just start with some introductions. My name's Richard Betts, co-founder of Real Asset Media. Our focus is on research, insight, strategy. We run 3 publications: Insight, Impact, which is around sustainability, and also Real FDI, which connects capital with opportunities in terms of foreign direct capital coming into Europe. So that's our area, and we also publish the EXPO Day, which is the daily news here. On to you, Hans. 30 seconds to introduce yourself.
Good afternoon, Hans Seckler my name. I'm working for Prologis. I'm part of the German capital deployment team, mainly focused on new developments, which means buying new lands, doing the permitting, doing the constructions, and in the end find the right customer. And on the other hand, I'm also responsible for standing asset deals. Prologis is, for those who don't know, is one of the biggest global logistics developer, and we are active in Germany since 25 years, and currently we are managing a portfolio of 3.5 million square meters.
Great. Daniel.
Daniel Kautenburger-Behr. I'm a partner, lawyer, and tax advisor at RSM in Germany.
That's better, yeah.
That's better, okay. And RSM in Germany is a partnership of tax advisors, lawyers, consultants, and auditors, advising inter alia investors, property developers, and tenants, and financial institutions.
Great. Krystin.
Hello, good afternoon. My name is Krystin Schwendel-Smith. I am an architect, associate director at BUCKLEY YEOMAN, and we cover all key sectors, both in the UK and in the rest of Europe as well, predominantly Western Europe. And I'm really interested to hear what everybody else has got to say this afternoon. Thank you for having me.
Great. Marcus.
So my name is Markus Lütgering. I'm country head of Newmark. My responsibility is number 1, recruiting people. So I started 1 year ago. Now we are almost 80 people here in Germany, and we are importing and exporting capital. And also we have teams that are highly actively in the leasing area.
Great. Dominik.
Yes, good afternoon. My name is Dominik Brambring. I'm a managing partner at Periskop Opportunities, which is part of Periskop Group based in Berlin. And I'm responsible for strategies, opportunistic and value-add strategies with a focus on operator-led sectors like modern living and healthcare.
Great. Interestingly, I was at the EPRA conference in Stockholm last week, and one of the major topics that came up in terms of concerns for the investors there, the listed investors, was actually the macroeconomic position. So that had gone above geopolitical risk, interestingly. So it would be good just to pick up on what we're seeing in terms of the macroeconomic position here for Germany, how that's playing into the real estate side, what our view is, I guess on interest rates, inflation, those elements, and general sentiment in terms of the German market. Let's start with you, Daniel, on that one, and then anybody else's views will be welcome. Daniel.
Thank you. Well, the recovery of the German economy is delayed, mostly due to the international trade uncertainties, US tariffs. So we still have a stagnation this year. It is expected to have moderate growth in 26 and 27. Interestingly, private housing investments have grown this year. That may be a good sign for the real estate market in total. Inflation is around 2% and expected to stay around 2% the next years. And interest is going slowly down. The mortgage rates are expected to be around 3% to 3.5%. If you look at the yield of the German government bonds with 10 years maturity, they're supposed to increase due to more spending in Germany, higher deficit. So, and that's always a reference for mortgage rates. So they're expected to be around 3%. So it's unlikely that the mortgage rates will go below 3%.
Okay, good. Yeah, do pick up, Marcus, yeah.
Yeah, I think we are a little bit in a defining moment. Yeah, generally speaking, we have some very positive trends. Yeah, as this whole thing of coming back to offices is changing or potentially changing in the long-term view. Investors' behavior, and my personal bet is, for example, offices are coming back. The macroeconomic thing at the moment is, unfortunately, that this whole, let's say, this whole political thing at the moment, nobody knows if the government is able to solve the 3, 4, 5 topics that are on top of the agenda at the moment. So even if you reduce the interest rates, I think the investors at the moment are super skeptical if this will impact the long-term interest rate in the same ratio. Yeah? So it could happen that the interest rate goes down, but long-term nothing is happening on the long-term interest rates, so that we stick more or less at the same interest rate level. And the interest rate level at the moment is something we don't like necessarily, because what we see in the fundraising activity is that the gap between interest rate and net initial yield is not sufficient to raise significant amounts of capital. So not enough money is at the moment coming into the market yet. And I think this is a little bit my long-term, or when I talk to investors, the midterm concern that everybody has.
Okay, good. And if you're there at the back and it's difficult to hear because there's a limit to how much we can put the sound up, there are headphones there. In fact, just there. Thank you, Pablo. They're not there. They're there. So if you pick those up, that will give you the sound, and you can see people using them, looking happily using them. Dominik, let's just get your take on that.
Yeah, I think there's still a lot of uncertainty in the market. Looking at international investors, I think they are missing a few data points that our macroeconomic environment is getting better, that the economy is picking up. At the same time, I have to say, and I repeat that all the time, is that the fundamentals in the German real estate market are still great. Yeah? In most sectors, there's a shortfall of supply in prime office. There's a huge shortfall in supply in residential and in modern living sectors and in healthcare, as well as data centers. It just requires a different approach, but you don't necessarily have to wait for the economy to really come back for these sectors to perform.
Okay, good. And Krystin and Hans, I'm going to come to you in a minute, but Daniel, just I suppose in terms of the current cycle, we've heard a bit about how we're seeing that, but how do you compare that with cycles that you've had before? Because for me, looking at the German market, we're in a slightly different place, but are we now in a position where it's suddenly going to accelerate and take off? How do you see it in comparison to previous cycles?
Well, the difficulty is the uncertainty, the geopolitical uncertainty, and also what Marcus mentioned, the uncertainty whether we will get to the reforms we need to boost the German economy. So most of the growth will come from public spending. If we don't have reforms, that will not be sustainable. So the difference is the uncertainty compared to prior cycles.
Okay, good. Let's just pick up a little bit, I suppose, on the capital that's coming in, and maybe just with you, Hans. Just what are you seeing there? I mean, are you seeing international capital still coming in? Is it a lot of domestic capital active in the market? What's your sense?
Just speaking for logistics, and I think it's when you ask is it's national or international, I think it's different. But we have seen investors over the last 2 years. They had quite good appetite for value-add product for properties which have been aging ones, older ones, which had some ESG topics, and where the investor had the chance to really get some upside potential. But since a half a year, we also see coming back also some core capital, which are really looking for core properties, modern properties, flexible, ESG compliant, and more important than ever, in the right location.
And had that capital been out of the market for a little while and is now coming back, or?
I wouldn't call it out. It's had been more quiet than it's now, but it could be more again, of course.
Okay, good. And are you seeing the same thing, Marcus? There, what's your sense of the capital, how that's moving?
I mean, I think again the fundraising activity has been super good for core plus and opportunistic value add. Okay, there's a lot of money in the market, and that was where everybody invested. For me, the big question is now, and this is why I say it's a defining moment. do the investors trust that they can succeed their missions? Just saying, if you buy an asset where you have to have to do a bit of leasing, yeah, do you have enough trust, or is the economy doing good? So you have trust, you can lease your asset. Yeah, if the economy is going down, you will have a problem to lease your asset, and you will not succeed your business plan. Yeah, and I think this is a little bit also one reason why some investors already shift their money from core plus or value add into more core-ish assets. Yeah, because you don't have to worry so much about the next 3 years if you're invested in a core asset.
Okay, good. Dominic, what's your take on it? Because you're obviously looking at more of the alternative sectors. So how are you seeing international capital looking at that market?
Yeah, it's interesting that you're saying alternative sectors. I see them at the future core sectors anyway, but that's exactly the problem.
Okay.
So
I'm going to write that down, Dominic. Okay.
People are I mean, there is this cycle is it's very structural. Yeah, so there's a sector shift away from some established sectors into other sectors. Like as I said, modern living and healthcare and others and data centers. So, and they're all operator-led. They are in most parts very granular. It's very difficult for international investors to implement their strategy. So, and it requires platforms, or it requires local presence in some form. And I think that's where private capital from Anglo-Saxon countries and the US is coming in. They're very open for this because that's something that has been in the market in the US for many years, and we are just about to kickstart this. So it's a different approach, and it requires a different skill set.
And in general, what is that capital looking for? Is it ESG compliant? Is there a real bifurcation in the market between what international capital is looking for, within Germany?
Yes, in the old days, international capital was in these situations where we had financial constraints, liquidity constraints. They were looking for distress and just looking to buy assets, buy them, fix them, sell them, make a good trade. But now it's about creating assets of the future core, as I just mentioned, and that requires building platforms. It's very different, but. So what investors are looking for are people that are able to build these platforms and help them execute their business plans. But it's just happening. I think it's about to happen.
Okay, good. And Krystin, you're obviously, you're working with partners across the world, but you're also very active here in Germany, in the UK, other markets. How do you see, I suppose, the comparative of working in Germany versus other areas? What's your sense of that?
Well, I guess we're sharing a very common problem in that our margins are very slim. So developers are very conscious of creating products that have that longevity, that work beyond just the 10 years, and that look ahead. It's the G in ESG, isn't it? It's the looking at old mistakes and trying not to make them again. And in answer to, or in to follow up on your point, Dominic, I guess it's being able to design buildings that are loose fit, that work with the ever-changing needs of the people who inhabit them or rent them. What is an office building nowadays should be able to be a lab in 10 or 20 years' time, or a student resi building, and you shouldn't have to knock the whole frame down and create this ever increasing embodied carbon. So it's keeping the existing stock as a commonality in all across Europe, keeping as much of the existing buildings as we can, and working towards buildings that are loose fit enough to respond to the ever-changing needs.
Okay, interesting. I want to pick up a little bit on, that actually picks up a point that was in the sustainability logistics panel that we just had before this one, which is how do you, future-proof, but also in the sense of embodied carbon if you're developing, because there may well be regulations that come in that are not there at the moment, and then if you've done all of that work, then you're in a much better position. I want to pick up a little bit on the different sectors. You mentioned the future core. Let's look at the current core. And I'm going to come to you for the logistics one in a second. But let's look at, I guess, office, retail, living sectors. Marcus, let's start with you. What's your take on what may be the more traditional sectors?
No, I think if you look at the sectors at the moment, I would say clearly residential is most core-ish. Everybody is going now. You have international interest. Even Korean investors go into German residential a couple of months ago, which was a very interesting news. Yeah, so that's done. Yeah, and then I would say number two in that line is logistics. Yeah, and but logistics already, I think the cycle discussion started already. Yeah, if you look at the vacancy rates in logistics, how you lease up your properties again, and this is more of a discussion than it has been 1 or 2 years ago. So this is core, but maybe with a little question mark. Yeah, office is for sure not core at the moment. Yeah, this is a very, very, I would say, narrow pick of the market that you do. I'm not saying they are right, but this is how they see it. Yeah, they just go for very, very limited number of assets and and retail. Yeah, long-term retail income. People like it as well. So this is the current core, to my opinion.
And we're seeing a bit of a lift in terms of over the past 12 months. A lift in terms of retail, and retail coming up much more in discussions than it was 12 months ago. Certainly more than 18 months ago. Is there a positive story for retail, do you think?
I think there's a positive story for retail, yeah, because if you look at a lot of data points, yeah, you see that retail is not going, or let's say the growth online is not what it used to be. So that you have there a certain shift, yeah, and it's going a little bit more, or the stationary retail is becoming stronger than it has been a couple of years ago, and I think the confidence of investors is just higher. Yeah, you see, like in Germany, you have this, for example, it's a stupid example, yeah, but you look at this Knusper, for example, yeah, that these delivery services, that you have a stationary retail, and then you have delivery service that bring it to your home. Yeah, I think this is a little bit the new start at the moment.
Okay, good. And Hans, let's come to you in terms of the logistics sector. I guess, what are you seeing as challenges in the market here? What are you seeing as opportunities? What's driving the market here? And do you see that as as an increasingly positive story? What's your take on it?
I would say we see both. I think biggest challenges are we have still too less product and too less land. Just showing or have a look on the current demand for new modern logistic product. There's still not enough product on the market. Just to share some numbers, currently the European logistics stock is valued with 300 billion euros. Just to close the gap for the demand over the next couple of years, there would be the need for another 150 billion euros development, which is quite a lot, and Germany is playing a big key role in this cycle. But on the other hand, Germany also is one of the most challenging market to get there. And now I'm coming to your question, Richard. Biggest challenges at the moment are, for sure, there's quite a lot of regulatory ongoing. If you compare permitting process 5 years ago to nowadays, it takes us twice as long to get a building permit. Also, if you have a look on network infrastructure capacity, Germany really scarce in land. There's not a lot of land left, and we are leaking. Employees is a problem, and also grid connection. Of course, sustainability, but every asset class has this issue. But ESG topics are getting more expensive than even before. you have quite a lot of obligations, like the obligation for solar on the roof, which will come up in the next couple of years. And yeah, also there is quite a lot of resistance from social and also from public side. Municipalities as well as citizens, they still don't want to have logistics in their villages or in their cities. But there's also a chance. We see at the moment quite a lot of brownfield or the chance for brownfield developments as there are some opportunities in the market, and this also gives now the chance to grow or also again in urban regions which have not been the chance over the last decades.
Okay, good. So there's some interesting potential on brownfield sites.
Yeah, we also have some two interesting topics, and it's always important to really talk to the municipalities and also to the local teams. Tell them who you are, what you want to build, how modern logistics can look like. We have a great project in Dortmund currently where we are developing on a 28 hectare site. Also in the southern part in Bad Pforzheim, that's an 11 hectare site. We really engaged really early in the process with the cities and come to a conclusion how modern logistics parks mixed up with commercial can look like.
Okay, good. You mentioned one of the challenges being regulation. I mean, I think that's interesting what you're doing there in Dortmund. Is regulation a challenge for all of the aspects? I mean, it'd be interesting, Daniel, just to pick up with you. Any thoughts on the other things that have been said? But also, is regulation one of the key challenges? I mean, it's certainly one that comes back consistently in these discussions.
Well, if you look in particular for residential, which is the most resilient sector, we heard from some investors that they're anxious that there will be rent control, rent caps, etc. So there is some concern that we get to that. Other areas could be, for example, subsidized housing, which has been a lot of interest in, even so much interest that the public funding programs have been used up already. Yes, regulatory has an impact, and there's a lot of uncertainty where it goes.
Okay, good. Let's pick up on the sectors again, I think, just in terms of, I mean, there's data centers, so the future core ones. How much capital is coming into that at the moment? What are the sorts of returns? What's the outlook in terms of that sector?
I think there would be plenty of capital. It's just, I think there's still not enough return in these projects. As you just mentioned, if you look at the yield on costs for residential in Germany, if you get to a 6%, that's a very good day. And if you compare that to other markets, it's probably on the lower point. That said, the exit yield is also much lower in Germany. So it's all relative, but still. I think there would be plenty of capital if we manage to get the costs slightly down in some of the sectors, and if we get regulation down in parts as well. Look at data centers, for example, and they're in high demand, and we have requirements to deliver renewable energy to data centers. But on top of that, you have to reuse heat. To 20% of the heat has to be reused. So per definition, you can only build a data center at the fringe of a big city where you can use the heat in some way or the other. So it's there are regulatory constraints in the market that needs to get lifted slightly.
Okay, good. You wanted to pick that up, Krystin.
But if you wanted to see the flip side of the coin, and if you wanted to compare Germany with Britain, at least you've got a good workforce and a pan-European workforce. We don't quite benefit from that. And in order to improve on the margins, we have to look in the UK elsewhere. We have to look quite specifically on our projects, and we have done a survey across all of our 1,000 retrofit projects we've done in our practice. And we found that the biggest hidden cost, is in the mechanical and electrical packages. This is how deep digging now into each of those projects to see how we can create value, how we can improve on those margins, how can we make sure that existing kit that sits in existing buildings can be refurbished by the leading suppliers and manufacturers. So we get an extended warranty, so we don't have to chuck the kit out, so we can keep the ducts and we can keep the pipework. This is how we're dialing in to try and turn the lever on our projects in the UK.
Okay, interesting. I mean, and just from your side, Hans, in terms of, if we look at construction costs, those kinds of elements, is that really hampering development as well in terms of, just making the numbers right in logistics as it is, I think, in living, we've been saying. So
we see purchase prices, construction costs, interest rates, they have settled at a new level. Therefore, we also see there are more new transactions back on the real estate market, but in the end, it could be always more, and it's I would say it's less than expected.
okay, so and do we think that this is generally preventing development, whether that's in living or in, I mean, I can see that data centers probably make sense because of the relevant value, but is that a real holdback in terms of development at the moment?
Yeah, I think there is a mismatch between the return that's required from international capital that's coming in and is willing to take the risk and the returns you can make in the environment. I think that's as simple as that.
And just to sorry, Marcus, go ahead, yeah.
I think the general problem behind it is we have a lack of ability to make decisions. Because where does this whole bureaucracy coming from? Yeah, because you're asking for informations. Then you have 3 times the amount of informations you need. Then you need 4 times the time you need to make your decision, and then you have a decision which is somewhere in the future and a long discussion process and a lot of negotiations with all involved parties. I think this is the problem, and for sure, yeah, we need, for example, we need apartments now in every big German city. We don't need them in 10 years. But when you start, if you need a B plan, you need 5 to 6, 7 years, whatever the number is, to start your construction. And this is what it makes it really slowly. And it really, I think, if you look at the IRRs and so on, they are hurt a lot. And I think this is why it's not working.
Okay, good. I wanted to look a little bit at opportunities, where we see those opportunities. The first one is maybe looking at it from a different way, but there's been a lot of discussion about distress generally, particularly here in Germany. But is that actually coming through? Daniel, what are you seeing? Is it coming through? Is it going to be coming through? And is it an opportunity for some different pools of capital out there?
Yeah, for some. We don't see any panic sales. Also, so it's but we see an increasing, for example, banks forcing sales or triggering sales by not waiving covenant breaches. We had some of those cases, so it's slowly expanding, and well, every year we're saying we expect the wave next year, but there's still quite a number of assets which were bought at the peak prices and which have weak capital structures, and there will be interest for those assets. Yeah? So there is an increased demand and increased interest in it, but it's not a big wave, and there are no panic sales. No?
Okay, so there's not a big wave. We're going to see there is some of that in the market, but it's not going to be a huge thing for people to come into. Maybe let's just pick up on rents, yields, some of the fundamentals in the market. What are we seeing there, Marcus?
So this is an interesting question. Huh? In terms of rents, they will depend completely on the macroeconomics. So, if we believe the forecasts of growth in Germany, the rents must be positive for logistics, for offices, yeah, no question about it. If we don't succeed, to have growth on the macroeconomic. Obviously, completely the opposite. Sorry for giving such a bad answer, yeah, but it's really like 50-50, yeah. If we don't see any improvement in the growth by the autumn or early winter, rents will move flat at best, yeah. And the same is true probably for the yields as well. Yeah, if the economy is not growing, we don't see too much capital coming into the country at the moment. At the same time, there are indications that the supply might go up because more assets might come to market. Then we will have increasing yields as well. Yeah. So, but both is it's a really I would say in the time where since I started to work, it's never been so difficult really to see what's happening in the next year, yeah, because very extreme situations can occur.
Dominic, what's your take on that?
Yeah, I think it's hard. I mean, one thing I think materialized that yields are here to stay in a, at around 2.5% financing yields, so refinancing yields. That defines the yields for real estate, obviously. So we can't hope for big yield compression. So everyone has to really focus on rental growth and continuous demand in their sector. And that's our approach. So and I see in the market that that's the general view. So concentrate on sectors that have a huge shortfall in supply and high demand at the same time.
Okay, good. It would be interesting to touch a little bit on the financing side. Is financing now generally available for most sectors here, including development? Does anyone have a view on that?
Yes.
Yes. It's interesting because it was...
Short answer is I think yes, and then you have probably different levels how available it is. Yeah, I would say
and how expensive it is.
Yes. Yes. I mean, the more risk, the more expensive it gets. I think the financing project development offices is probably the toughest call at the moment, but it's possible. It's possible for sure. Yeah, and it was different a year ago or 1.5 years ago.
Yes, where finance was... We were running several finance discussions just on those. We have one immediately after this. But yes, it was what was available, but now availability seems to be generally pretty good is across Europe, but interesting to see that in Germany as well. In terms of locations, if we have people who are looking to invest in Germany, what are the locations people should be looking at? I guess, is it the main cities? Is it B cities? Are there more opportunities further down? What's your take on it?
Yeah, cautious markets as we have today, or we had the last 2 years, I would say it's even more important to go for the right location. Therefore, on logistics side, I would recommend just going for prime locations.
Prime locations on
no
logistics?
B, no C, yeah.
Okay, great.
Yeah, it's obviously very sector specific, but prime is definitely necessary to get financing and your tenants. Also in the office sector, we see a strong focus on super prime assets. In residential, we see a focus on urban environments, I would say, larger cities. So urbanization is still a mega trend that's going to stay with us for good, I think. That's why, I mean, really, you don't necessarily need to be in the A cities, but you need to be in a strong urban region in residential.
And obviously demographics, not just in Germany, but Germany also has the same issue as the rest of Europe, which is an aging demographic, of course. So does that mean that there's more of an opportunity, maybe not immediately, but coming through in terms of senior living, care, those kinds of elements that are associated with that demographic change? Yeah,
that's on our list. So as the alternatives, as you call them, I call them future core. I say, something like serviced senior living. I say serviced senior living because it's not necessarily driven by care needs. It's more service needs that you require as an older person. It's a barrier-free environment and so on. I think that's really driven by mega trends, and we're going to see more demand coming our way in this sector.
And Germany is wonderfully decentralized already, and one should not disregard the regional capitals, the regional towns, because as you said earlier, people are moving away from the countryside, and in the later living sector, people do not want to live out in the sticks. They do want to be close to a doctor, and they do want to be close to all the amenities that they benefited from, or that their children benefit from.
Good. Does anybody have a question? I forgot to ask earlier. Has anybody got a question? If you have, now is a super time to ask, because the session is still on. Here's the question. If you haven't, that's great. I've got one final question for everybody to keep us all nicely on time, which is, I guess, where do we look for the best returns? So if we were looking to 2026 and thinking, right, I've got all this money burning in my pocket, where can I allocate it? Where should I go for the best returns? Now I have a feeling you might say logistics, Hans, but we'll see. You may surprise me. Let's start. So let's move our way down. Where do we think the returns are?
Yeah, that defines our sector focus, obviously. I mean, we're going for sectors that are driven by mega trends, where we see a lot of demand in the future. Modern living types, including senior service living, healthcare assets, also driven by demographic trends, and anything that's driven by other mega trends like digitalization, like data centers and so on. So it's all about demand and nothing else.
Great, Marcus.
The counter argue would be to go where nobody else is going. So so then do project development for offices.
Okay, on the basis that you think there'll be a shortage of office space going forward, or
There
the right
will be,
sort
but
of
you
office?
have to be careful with the location, obviously, yeah. But this is something that's the most difficult, so you have the highest returns there.
And so, just to drill down into that a little bit.
Yeah.
So at the moment, does that mean you've got a lot of office stock that you think is going to need to be repurposed for something else, and that therefore it needs the right office to be developed?
No, I really believe, and when I'm talking to our leasing brokers, they will tell you that a lot of the leasing contracts out of the last 3 to 5 years, people leased not enough space, because now they want the people going back to the offices. So there's a shortage of offices in good locations with a nice quality. Yeah? And I think this is something where this is a segment in the office market where we would see even the rents increasing no matter what happens generally in the economy.
Okay, interesting.
I have to agree with Marcus. Our highest clientele sits in the office world, and we've got a glut of tired, distressed office assets in Europe, and our clients tend to ask us to do smart retrofits to existing buildings. But I've also got my money, on co-living and those modern sectors, because it's ever so hard for young people to get onto the mortgage ladder, and so there's quite a couple of decades for that to do really well.
So you're agreeing with both Marcus and Dominik, in fact. Yeah, I can see that. Good. Over to
All
you,
about
Daniel.
consensus.
Well, I would also follow Dominik into his alternatives, and with a view on a long-term investment, I would go for subsidized housing. We get very beneficial financing terms, you get lost grants, so it's very interesting.
Okay, subsidized housing. We're getting a good variety. Surprise me, Hans.
Surprise logistics, but I would say it's quite important to make the product as much flexible and third-party usable as possible. Then I think there's good chances for the future, and you also have the chance to go in a later stage for data centers if the grid connection fits, therefore logistics.
And within the logistics side, is that more of a focus on, let's say, the smaller urban or the kind of big box? What's needed here in Germany, do you think?
That's depending, of course, on the demand, but now is the chance, as I said prior. Currently, we see quite a lot of brownfield developments, or the chances to buy brownfields, and that's now the chance to get locations quite close in urban regions, which we haven't seen or done over the last years.
Okay, great. Very interesting, different sets of opportunities there for people. Thank you very much for your insights. Thank you to everybody for joining this session. The next session starts in 15 minutes, or just slightly less than 15 minutes. And that's going to be looking at debt and financing. So both debt from an investment perspective, but also the financing markets. Thank you very much to everybody for being here, and thank you much for joining us online. Thank you, everybody.